You know, they always say it's not so much the earnings, it's the guidance that companies give. And American Airlines hitting some severe turbulence and stock dropping about 15% on news that, well, its guidance wasn't exactly upbeat. It sees things slowing down, planes maybe not as full in the future. It follows a pattern we've seen of late of some premier companies saying things are slowing, whether you're talking Home Depot, McDonald's, Starbucks. They're all in that same camp where things might be showing consumer retrenchment. Thomas Hayes is a Great Hall Capital chairman and managing member. Genius with money. So, Thomas, when you look and hear these companies saying, not every one of them, but more of them, we've got a consumer pullback going on here. But what does that tell you as an investor?
Well, the one thing I've learned, Neil, over the years is that to never bet against the U.S. consumer when they have a job. And with unemployment under 4%, I think this says a lot more about American Airlines management than it does about the U.S. consumer. They've been running this business like a dog chasing their own tail, rather than looking through the windshield at the consumer, the business traveler coming back. They've been looking in the rearview mirror at the revenge travel spending, which is actually waning. So the companies that have managed their business well, like Delta, you see American Airlines down today about 15%. Delta, which is a well-run airline, is only down 1%. So that tells you everything you need to know here.
That's a very good point, Tom. So I'm going to steal that and say it was my own. So, Thomas, let me get your take on this, because other companies are finding ways to help their shoppers. I noticed Walgreens is cutting prices on 1,500 plus items at Target. We've seen Walmart, Amazon doing variations of the same thing. So they are trying to respond to this. What do you make of it?
Yeah, even Dine Equity, which is Applebee's, is offering a lower price menu. I think this is disinflationary. You know, we've seen the pendulum swing so aggressively from expecting 7 cuts at the beginning of the year to less than 1 cut now. I think it's somewhere in between. And I think this kind of sell-off and this little volatility we've seen in recent days where everything's just going into NVIDIA and some of the perceived safety stocks is temporary. I think we're actually going to start to see, we'll get some inflation numbers at the end of this week. That 1 to 2 cuts is actually realistic this year. And if that happens, that broadening that started in the rally and we've started to see is going to extend. And you're going to see small caps and you're going to see dividend payers. Once that short rate goes below 5%, dividend payers have been very, very neglected, and they're going to be a huge opportunity for the back half of the year, Neil.
Wouldn't the market, we don't have much time, quick thoughts on the first cut might be greeted by a sell-off? That maybe, you know, in anticipation, maybe go up, but the actual event go down?
Buy the rumor, sell the news. It's always possible, but I think it's very good. There's a lot of debt that needs to be refinanced, Neil, especially among the small cap companies. So you might get a buy the rumor, sell the news, but I think when companies go to hit the window and refinance, analysts like myself and portfolio managers are going to see that these companies' balance sheets are better off for it, and we're going to get a resurgence in that broadening that we discussed. All
right, we shall see. Thomas Hayes, good seeing you again. The Great Hall Capital chairman and managing member. It's an interesting way to step back and look at the big picture, as he does.